The S&P is currently up by just over 0.5% at 1293. It did take out that important technical level of 1295 yesterday, and we're still stuck below it, which means that some people feel that might just be a little bit of an upward blip in an otherwise downward trend. As for the sectors, you've got all of them moving to the upside here, except for down in the corner in the red. Telecom is down by 0.2%. Larry.
All right, thanks, Mandy. So investors will be keeping a close eye on Ben Bernanke today. The Fed chief gets ready to speak about the stalling recovery. And earlier today, our own Steve Liesman spoke with Dallas Fed President Richard Fisher about whether there's enough liquidity in the U.S. economy.
The Fed has put a lot of liquidity into the system. You can argue that we've put too much. I've even argued that internally, but you cannot argue that we haven't done enough.
All right, Fisher says there's no need to the central bank to continue its easy money policy when QE2 ends at the end of the month. So what do the markets want to hear from Mr. Bernanke today? Joining us, Tyler Vernon, portfolio manager at Biltmore Capital Advisors, Kevin Mann, CIO at Hennon and Walsh Asset Management. Kevin, ask you, all right, what do you want to hear from Bernanke? I mean, is he really going to impact stocks today?
I think he could. I don't want to hear that there's a possibility of a QE3. I think the markets would react favorably to the potential for QE3 because that would, in fact, provide a catalyst for the next leg of this particular bull market. I don't think we need it. I don't know if QE2 or even QE1 has been successful in that regard. But this is going to be a long and drawn-out recovery, and we need the private sector to lead the way. So the more the Fed can stand aside and accommodate banks and accommodate lending, the better it will be for the overall economic recovery.
Tyler, what do you think we're going to hear, and what would you like to hear?
Well, Bernanke came out, as we know, mid last year when he announced QE2, and he talked about wanting to inflate asset prices. Specifically, he mentioned stocks. So I think he's going to continue along this board. If there's anything the Fed continues to do, and if there's anything we learned from them in the past, is that they keep that foot on the accelerator for too long. And I think that when you look at the futures markets, when you look at when they anticipate the first increase, it's moved from the first quarter to sometimes second and the third quarter. So I think, if anything, the Fed is going to try to be somewhat agnostic here, but if he's probably going to say that we're here if anything needs to happen, and I think that's going to be bullish.
You mean he's going to basically say we're here to backstop it, be the Bernanke clerk?
I think he's going to dance around this a little bit. He doesn't want to scare investors because I think that could also be an indication of we think something's wrong.
What could he say that would scare us? Say that the growth slowdown is more than transitory?
Yeah, I think if he said anything more that this is a blip on the radar, I think what he has to say is, look, you know, we're getting the growth that we need. In any recovery, we see a little bit of a hiccup, and we feel like that's what we're in now. But the Fed is committed over the long term. So I think he's going to dance around this a little bit. But at the end of the day, I want to see something that's committed to the overall recovery.
Well, Tyler, I'm surprised you're so worshipful of QE2. I mean, all I see is a higher unemployment rate, a higher inflation rate, a lower dollar. Suppose he gives you QE3. And stocks are up 60 points today. Maybe the market agrees with you. Easy money, easy money, easy money, easy money. That's the solution to our problems. Easy money, easy money. Why? What's your bet here? You go buying, you're going long or short? You buying cyclicals or defensive? How are you coming out on this? You're so Bernanke dependent. I can't believe it.
Well, first of all, we're not a big fan for the overall recovery, what's happening. But I think if you didn't buy stocks when he announced QE2, you missed out. So I think it's a push-pull of what's happening here. But I think you have to be very careful with stock selection. And, for example, you know, we're buying Lenovo. We bought some here this morning. You know, this company is taking advantage of what's going on in, you know, with technology at this point. They bought IBM, for your viewers that don't know Lenovo, as far as their PC maker. Their shipments are growing by 16% year over year in an industry where it was down 1%. They're doing phenomenal things. They have a tablet that's coming out. They have a cell phone business that's starting to boom. So I think we need to be very careful because I do think longer term this is going to be a sideways market, and strategies like covered call option, which Biltmore manages, and other options and other types of strategies need to be exciting to overall markets.
And I wonder whether, Kevin, if there is any possibility or suggestion of QE3 that might be a negative for stocks, considering that the inflationary fanning that we've seen because of QE2 is eroding margins, it's hurting corporate profits, eroding consumers' purchasing power. I mean,
Deep yogurt.
Personally,
Deep
I
yogurt.
think this would be a negative, no?
Maybe not. Maybe not. You're gonna be a little more optimistic.
Yeah?
You're
Are you
very
optimistic?
pessimistic this
Am
morning.
I? I'm just
very
I'm playing devil's
She's
advocate. I don't want to say that
But
this is
go
going to
ahead.
be great and we're going to boost asset prices and it'll all be hunky-dory.
Speak for yourself.
Yeah, I see no net positive of QE3. I think the markets have reacted to the decimation in Japan. I think they've overreacted to the strength of the U.S. consumer. I think there are inflationary pressures in the market. I still think there are opportunities in the commodities market for investors, whether it's agricultural commodities, metal-based commodities such as copper. Copper's up over 34% over the last year. It will be a key component to the infrastructure build-out in Japan. And I still think there's room for energy commodities. You look last week alone, look overseas in emerging markets. They were net up for the week, while developed markets internationally and domestically were actually down. So I think there are opportunities, but you just have to look beyond U.S. large cap and beyond traditional asset classes.
They're always out there if we look hard enough. Thank you, guys. When we come back.